Hello, welcome back to this lecture. Friends, we already had a glimpse of overbought and oversold conditions in the introduction of this course. Now in this class, we will go in depth into these two pillars of Bollinger Bands. So the fact that Bollinger Band is a self-adjusting overlapping tool, it is often used to identify something called overbought and oversold conditions. Now, overbought condition happens when the financial instrument experiences a rise or extension in price to such an extent that it has gone over a certain limit on a scale. Now, when this happens, it is said that overbought condition has occurred, and then what follows is a reversal in direction or a correction in the stock. Hence, in this situation, an investor should look out for selling or shorting opportunities, and this is as per traditional Bollinger Band use. Now friends, indication of overbought and oversold level of any asset class is in fact the many uses of Bollinger Bands, and this we have seen in previous lecture. For most traders, this is the single most important use of Bollinger Band and the only reason they include this in their charts. Similarly, when the price hits the upper Bollinger Band, then it's said that market is too much stressed out and now we can expect a reversal or correction shortly. As you can see here in this GBP USD hourly chart, as the price starts hitting upper band at regions 1, 2 and 3, there was reversal shortly after that. Friends, you can also understand overbought levels as levels where markets are said to be overheated and it indicates that correction is very near. Next, opposite of overband is oversold condition. And similarly, when price hits lower Bollinger Band, we call this as oversold condition, or the condition where reversal in upward direction is expected. Again, look at the same chart of GBP USD. Please focus on the regions 4 and 5 where price extends beyond lower band and soon after that correction happens in upward direction. But friends, is it really so easy to trade Bollinger Bands this way? Well, most new traders only know this way of trading with Bollinger Bands. For them, when price hits or extends beyond lower band, go long, and when the price hits overbought region, then go short. But friends, this traditional way of using Bollinger Band is not much effective in today's markets. And this approach often leads to false trades. So at this stage, you must first understand that if the stock or currency pair goes beyond upper band, then that does not necessarily mean that the price will start going down. In fact, price can keep moving beyond upper band for a long period of time. Just look at this chart of TCS. Notice this region where price keeps extending beyond upper band candle after candle for a significant period of time. Though traditional Bollinger Band theory says that price needs to make a downward movement from here, but as you can see, the bullish trend is so strong that the stock made a strong movement in upward direction only. Similarly, notice this Nestle chart. Just look at this region where price keeps extending beyond lower band candle after candle. But as you can see, the stock keeps moving downward even after price hitting the oversold region. Friends, the market was in fact so bearish that stock keeps moving downward for a long period of time. Thus, we can conclude that reversals at overbought and oversold regions, that is at upper band and lower band, are not necessary. The probability of reversal is high in sideways market as you saw in GBP USD example, which we did earlier. There the market was in sideways movement and Bollinger Band was also contracted and not expanded. But please note, in a trending market, reversals are not imminent. Thus, using Bollinger Band as a standalone tool to buy and sell decision may result in losses in a strong trending market. Many traders mistakenly believe that because the securities price has touched the upper band, they should go short. And similarly, when the price hits lower band, they should go long. However, such a price movement should not be viewed as a signal to buy or sell. Price penetration of bands alone is not an indicator to buy or sell. This is because, as you have seen earlier, that during a strong downward or upward trend, price can often stick to either lower or upper bands. But please don't worry, we will counter this problem also later in this course with our trading strategies. So with this I wind up this lecture. I hope the concept of overbought and oversold region in Bollinger Band is clear to you.